Okay, here we are back again. And now we have to talk about the next criterion in our test if something can be taxable or not. And this is now the simple question if something is done for consideration. For consideration is nothing else than a high-leveled English term for something is done for getting something in return. So what it simply means is if you render goods or services for free, then under normal circumstances, this does not trigger value-added taxation. Yeah. So only things for which you have yourself paid can be the cause for value-added tax. Okay, that seems to be a clear and simple thing. Usually it is a clear and simple thing because usually if you do something for somebody else, you charge that person a price. At least that is what entrepreneurs usually do. Nevertheless, there might be cases where even the criterion, if something is done for consideration, can be debated. For example, some cases have shown up where it was not clear what you got in return for what you did, or if that what you got had really to do with what you did. Now, the courts say for consideration that requires that there is a clear inner specific connection between the supply of service or the delivery which you supply and the consideration which you get in return. So only a diffuse connection, it has something and somehow to do with what you did, what you get in return, that would not be enough. So the condition must be that the enterprise makes a delivery or service under the expectation to get something in return for that. By the way, you need not necessarily be able to say exactly what you get in return, but you must expect something in return for that activity which you did. So, for example, one good example would be these people in some oriental countries, at least in our imagination, there are still people who for tourists offer to clean their shoes, and very often their conditions are let me do and then you give me what you like. That would be already for consideration because two things become clear from the situation. First, that person is not working for free for you, and there will be the clear expectation that you pay something. And secondly, it is not necessarily required that you can name the exact amount which you will get in advance, but it will be clear that when you get something, let's say $1, $5, $10, depending on whatever generosity you want to show, that this is now paid for this reason, that somebody here cleaned your shoes in the traditional way, kneeling in front of you, which gave you the feeling that you had some tourist experience with and connection with the customs of foreign countries, which, by the way, probably are no longer existent apart from for tourists in that foreign country. Well, but you could determine the expectation. I want something for this, and later you can find out you got this amount for this activity. Yeah, so for whatever you give is already for consideration. It would also be for consideration if you demand a price and then customer never pays. That was for consideration because for consideration describes the aim. Okay. To receive a specific counter performance. On the other hand, imagine, for example, an enterprise sends Christmas presents to important business partners and to customers. The idea is these people will probably react with generosity, kindness, and friendliness, and will buy more or more easily or more happily in goods from our enterprise next year. This is not done for consideration because there is no strict specific link between what you do and what they do in return. What they do in return can never be specifically connected to your present. So your present was really for free. Yeah. Another case which very often plays a role, where that very often plays a role, is, for example, if you act, this is now not on the slide, if you act as a manager for your own partnership. Then one can see this as either working for free or as doing the managing work and getting paid for it, for example, on an hourly basis. And there it very much depends on the circumstances of a contract, if that can be seen as an independent activity of the manager in return for a payment, or if you do this from a VAT perspective without clear consideration. For example, if the conditions are the partnership pays to the managing partner, let's say €50 for each hour which the managing partner works for the partnership, and the manager has that claim under all circumstances, even if the partnership makes a loss, then it's clear that for each hour which you work for the partnership, you as an independent person have a claim to €50. So that's clearly for consideration. On the other hand, if the deal is a bit different, if, for example, the partnership contract says we are 3 partners, 2 of them are rather passive, partner 3 contributes as much capital as the others, but also does the management work, and in return for that, partner 3 gets a higher share in the profit. In that case, the courts would decide. Well, that's the most simple things, way out of the problem. So in that case, the courts would decide that there is no strict enough or clear enough connection between what our manager does and what he or she gets in return, because, well, you can get a profit share, a high or low one, that can be freely agreed. And so it is even debatable how much more you got because you were willing to do the management work. And then how much your profit share will be does not really depend on how much management work you do. It very often is also strongly dependent on coincidences. It might be that as a manager you are enormously lazy, and then industry is booming and you drown in profits. So for a maximum amount of laziness, you got, just by chance and coincidence, 1 million more than the others. Might happen. On the other hand, might be that you really work 20 hours a day, ruin your health, and then due to a bad situation in the economy, you earn nearly nothing. So in that case, your additional profit share is not strict enough connected with what you get in return. So one could not determine strictly and clearly enough what you get for the management work. It would not be considered as for consideration. One can a bit learn from historical court cases where the lines are. For example, there was a famous case from Belgium, I believe, with a street musician. And street musicians usually play music in the street. Passers by stay and listen or pass by. And some of them throw in some coins in a hat, which usually is there just to receive these coins. And some of them throw in many coins, others throw in some coins, and others throw in no coins. These are usually most of them. And especially, or exactly that business model was run by Mr. Tolsma from Belgium. And the fiscal administration of, I believe it was Belgium, asked him for value-added tax on his revenue, because they said what you are doing is constant activity independently undertaken with the aim to achieve revenue. Yeah, really. But now, Mr. Tolsma evidently had a very good lawyer or tax advisor, and that person brought another aspect into discussion, because they said, okay, Mr. Tolsma acts as an entrepreneur. What he renders can only be services, and now it must be services for consideration. So there must be, you must show that he does something for a contract partner or for a customer in return for a consideration. And the matter goes to court because the tax advisor said Mr. Tolsma plays for free for every passerby who works by or stays and listens. He never can be sure that one of the listeners really gives money. It's even not a condition. And some people just pass by, don't listen, and throw in some coins, and others listen for hours and throw in no coins. And now under VAT, you remember the preparatory steps we have always to find out the entrepreneur and the customer. So every contract relationship has to be seen individually. And so if you see the relationship between Mr. Tolsma and any given customer, he plays for every individual customer without having first an open or silent condition that the customer must pay. And he can not even expect that the customer pays, because most of them don't pay. Then, if they pay, a high percentage of them even pays without having listened. So there is no close enough inner connection between what he gets from the passers-by and his music playing. That convinced the court, and they said, yes, according to the principles of VAT, that's right. He just plays. People can listen for free. There is no condition that they must pay. And if they pay, the payment also has no inner connection to what they got. Some listen for 2 hours and pay 10 cents, or just walk away silently, not to disturb the others naturally. And some others listen for a second, are fascinated, and go on and throw in €5 or so. So the closer inner connection is missing. So that was not for consideration. So Mr. Tolsma escaped the necessity to pay value-added tax, because in his case, his activity was not for consideration. That would have been different, by the way, if all the people listening to him would have formed a partnership or an association or a group of people acting as a group, because then his contract partner would have been the group, and he could have reasonably expected from the group would come a payment. So here it not only illustrates what consideration is, or for consideration, that also it illustrates that you need to look to every individual contract relationship separately. You cannot just sum them up or put them into the same bag or in the same set of things and view them as a whole. That would not be possible. You have to check every individual transaction individually for the 5 conditions of taxability in 1.1 number 1, and that shows that this is not close enough then. There is also a recent case from January 2021, so just absolutely new from this year. It is the Finanzamt Saarbrücken case, which is certainly going to become famous, because there an enterprise gave one of their employees the permission to use a business car also for private purposes. So you could drive home with it after work and use it for private travels, and so employer paid for it. You got the permission to use it. And the German Fiscal Administration says, okay, if you allow your employee to use that thing for private purposes, that is just a kind of a rental contract between you and your employee as a consumer. That employee may use the car, so that's a rental contract. And that is not for free, but for consideration, because you allow this to your employee because you expect that the employee works harder in return, or renounces on a salary rise, or doesn't insist on an enormously high salary rise, but is then satisfied with a lower salary rise. So you get more work in return, or better work in return, and need to pay a lower salary because you do this service for your employee. So that was the standard argumentation of the German Fiscal Administration for a long, long time, that letting a car to an employee for private purposes is for consideration because the employee pays with higher, better, more work. Now that matter went to court. After a long time, somebody challenged that view in court, and the Finanzgericht of the Saarland, so the fiscal court of the German state of Saarland, said, well, it depends on how we understand the term for consideration. And as we know the basics, naturally fiscal courts know the basics, we know that the German legislator, by choosing its words in 1.1 number 1, wanted to follow the orders of the EU and wanted to say exactly the same as the EU directive wants to say. And so we have to ask the European Court of Justice what the EU directive really means by the words for consideration in cases like ours. European Court of Justice heard the case and then said, well, if a service rendered by the enterprise is for consideration, then one must see a clear inner connection between the both of them. This requires that first you can clearly identify what the customer gives in return, because otherwise it's just a case of diffuse expectation. You can't name afterwards, like in the case of the Christmas present to the customers and business friends. You are pretty sure you get something in return, but even in the retrospective, you will never be able to identify clearly what you got. And in a case like the one in front of the court there, you can just assume that giving the permission to use the car for private purposes is not for free. That's still reasonable. But the problem is you can never clearly identify which amount of working time the employee works for that permission in return, or which specific amount of salary he renounced upon in return for the permission to use the car. So the transaction is not for consideration. And so they held that allowing an employee to use a car also for private purposes is not for consideration from the perspective of VAT law, at least if the contract does not fix a clear remuneration, an amount of money, or perhaps also a clearly defined amount of working time. But I would prefer at least the clearly fixed amount of money which the employee has to pay back to the employer. So if nothing definitive is fixed, then that means there is no identifiable counterperformance from the employee for the permission to use the car, so it's not for consideration. That will, by the way, not lead to the consequence that this is then completely untaxed consumed, because there is a rule that a firm has to pay tax if it allows their employees to use for consume purposes things or services from the enterprise for free. That's just for reasons of fairness. But then the legal basis is a different one, and usually the tax base is lower and follows other rules, can be more easily determined, and then in that specific case leads to a probably more favorable outcome. That is why the taxpayer intended to bring that case to court and challenge the traditional view of the German fiscal authorities. Yeah. This last slide here shows you, by the way, the legal basis for the taxation of some transactions which are made without consideration. In cases where the owner of an enterprise withdraws an object or a service from the enterprise to the private sphere, then it's necessarily not possible that the owner pays a consideration for himself or herself. So there you would have a gap in the system, because the owners of enterprises would be able to have private consume untaxed. And in order to close that loophole or that gap in the system, there is a special rule which says that then in such cases the criterion for consideration is deemed to be fulfilled by order of the law. That is something which you can find in the German law in paragraph 3 section 1b for goods and paragraph 3 section 9a USDG for services. The motivation which justifies that is just that an untaxed private consume should also be made impossible for entrepreneurs, otherwise they would have preferential treatment with regard to others. The details will be discussed in later chapters. Exactly in the same way as such a withdrawal is also taxed, the case where an entrepreneur gives something for free for his employees or closely related persons for private consume. And if you look for the legal basis of that in the value-added tax directive, you will find it in the articles 14 and 26, so you can be sure that basically at least the same solution for the problem of private consumer, of entrepreneurs and employees of an enterprise without specific consideration can also be found in the legal system of other countries. Yeah, that shall be enough again for that third criterion for consideration, and I hope you are already torn apart by suspense to get some information in the next video on what the delivery of a good and service is and how you can distinguish them from each other, and in how far that is of importance for value-added tax. Naturally, even myself does not really believe in that a tax problem can really tear apart beginners by suspense, so but allow me the illusion. enjoy the little break which is going to come, and then I'm happy to see you back soon here on this channel with the next video on value-added tax basics. Thank you very much for watching, and till later.